Hey traders, welcome back to a day trading penny stock recap video. We're going to discuss tickers DPW and DTSS in this video. To start off with DPW, it closed yesterday at $4.25 and spiked to a high of $6.90 in the pre-market of yesterday. So it was actually the after hours of yesterday's market action. Receded all the way to 537 and pump back up. Now, like I mentioned in yesterday's video, if you're shorting a stock, you want to just get in relative near the highs, like I did in this entry point, 638, because you can tell that there's definitely some resistance in this area, which pushes the stock down. And with that being said, you're going to risk about 75 cents to make 75 cents. So if you got in at 635, you can target price about 575 and get out at round 7. So 65 cents to make 65. So with that being said, you'll take a 382 share position size and look to make 220 and risking 250 on a $12,000 account. Now, I went a little small in the position size on this one only because I knew that it was going to recede and I'd probably take a win, but the amount that it was going to pull back wasn't going to be as substantial as I wanted it to go, because ideally to make a big win you want under 5.5. That wasn't the case. It popped back up after coming down, so I was forced to take a small win around 5.88. Now, DTSS was a big mover, and look for more penny stock gap ups to be more bullish than bearish going forward. That's why I'm taking smaller position sizes, because of short squeezes. Lately, all of the stocks that have been going up in the pre-market, like DTSS, have continued to get stopped out and go back down and recede to the previous day's close. Just like this one, where it went from 4.3 back down all the way to almost 3.2. Now, when you look at that, you say, okay, it's done. It's got all the bears are under control. There's no way it's going back up. A little bit buying, come back, a little bit more buying, and now we're at the pre-market resistance again at $4.30. And if that breaks, that's most likely going to cause a short squeeze, which happened right in this area, where tons of buying from both sides of the traders causes the stock to go up substantially. Now, if you want to short, you got to wait for the confirmation that the bears are really in control, either early in the pre-market and get in for this one, or you're going to have to wait for the stock to top out all the way up here. Now, the 1-year, 1-day history shows that it is known to having a major resistance at this level. By that, I mean it's had ceilings and pushed back down from these highs around $6 a share. So that history can help you as a trader know where it is safe if you want to short a stock, and that creates about $1.50 return per maybe risk $1. So if you got in at 5, let's say 6, your target price is 4.1, and you will get out $1 above at 6.6, and that can create a nice return on a 250 share position. So that's actually very ideal stock to trade because of how big a percent move it was. I mean, it's a 100% move in one day, in a couple hours, and that can cause a major downtrend, but also a major push up. So both sides can have potential to make money on this stock. So look for more penny stock day trade opportunities like this.